up, let's understand what's happening for our markets and how is it that you should wade through this weakness. Hemang, Jani as well joins in on the show right now. Hemang, hi, morning. Just wondering what investors should be doing. Of course, the more short-term players in the market, should they be getting now into capital protection mode? And what about the medium and long-term investors? Are these now finally some good buying prices? And then what do you buy?
Yeah, good morning, Aisha. I think the intensity or the sell-off and the momentum on the way down is extremely high, and it's been going on for an extended period of time. So I think we should let the market stabilize a bit, let the those sell flows also stabilize. Definitely, we all can, attribute this fall to many factors, including earnings and dollar index and all of that. But I do think that given the intensity of the fall, let's say index Nifty has corrected 10%, the broader indices have corrected 12%. If you see within Nifty and broader indices, some stocks have fallen 25, 30% or even more. So I do think it's time to kind of do a little bit of homework in terms of the pockets, sectors, companies which have delivered a good set of numbers, and you could surely make some sort of a plan to deploy money, keeping in mind medium to long term perspective. Of course, short term, it will be difficult to gauge because of the volatility which is there in the market at this point.
You could pause now and just ask yourself that the intent, what happened yesterday? Let's look at FIDI number. It's not bad. I mean, 3,000 crore is almost like a daily routine now. And the FIDI, if it is mapping and matching, yesterday's data was actually lower than 3,000 crore. I'm assuming 22,000 to 2,500 is the new normal, at least in the near future. DI buying, let's look at it. DI buying was much higher. So net, the institutional activity was plus 4,000. In the FNO market, not too many short positions were created by the FNO. So Nuresh, becha kaun? And I'm going to do simple maths here so that people don't get confused. Elementary maths. DI buying 6,100 crore. FI buying, karo bhai subtract kitna hota hai? 2,500 crore. More than 3,000 crore of plus buying, Nuresh. Kaun becha?
So yesterday there were two adjustments to be done. There was a PNB housing bull deal which was almost 2,300 crores. As per the bull deals, FI has bought 1,500 crores. The seller was a foreign company which does not get into FPI or DI. So add up that 1,500 crore plus. So that's almost 4,000 crores of selling. And there was Swiggy listing which had 2,000, 2,500 crore of delivery volumes, which could have seen a large part of it being DIs and FIs buyers. So I would say there was closer to 4,000-5,000 crores of FI selling and 4,000-5,000 crores of DI buying.
Net, it is still neutral, Nuresh. Yet markets went down. I mean, my point here is that there is retail or HNI or both or hedge funds where data does not captured. There's a different end of the market which has started selling. That's the point I want to bring out, that folks who were always buying and buying and buying, and they bought when markets fell on election day, they bought when markets fell on budget day, they bought every time bad news has come out. Now they're still selling, even though in last 48 hours the news has not been bad. Nuresh.
So what has happened is we've seen 33 days of non-stop FI selling. So at one point of time now, we've broken down various important price points, and that leads to a little bit of margin selling, a little bit of fear across the board. So in the initial fall, when we paused at 24,000 odd levels, there was not much of a fear. But now we are getting into a fear zone. We are getting oversold. We are getting into price points where we've seen 1.5 to 1.6 lakh crores of FI selling in 33 days, which is, I think, it's a record in terms of a continuous session. So in this case, till the time the flow continues to be weak, it is tough to call the bottom. But once we see a reversal over there, or at least price points, then we can look at it. But it's been a one-way outflow, and it has been continuous without any relief.
Rajesh Palvia, how should one deal with this market? 200 DMA gone. Are markets oversold? Can they remain oversold? Is it a time to go against the tide? Because it's not for the first time we've gone below 200 DMA.
Morning, Nikunj. So Looking at the overall structure, yes, we may remain in oversold trajectory for some more time as the buying intensity is still not that much great to counter the supply of FIs, and the significant sell-off from the FIs are uh, keeping everybody on the caution mode, and nobody is trying to buy. Though the most of the quality stocks are now available at very attractive prices. We are now at almost at 200-day moving average. Again, most of the portfolios are going to restructure, or again we could see some sort of selling pressure if we slip further below to 200-day moving average, because most of the fund managers also follow this 200-day moving average as a entry exit point. So I think that supply can again come in the market if we slip further below 23,500 level. Uh, Market structure is oversold. Both the indices, major indices, Bank Nifty are in the oversold trajectory for near-term to short-term perspective. But still, there is no sign of reversal. There is no, sign of reversal from any of the large-cap stocks at this juncture, which could hold the Nifty at current juncture. So I think maybe another couple of days we could see some more supply pressure. This is again very important level to watch for 200-day moving average, and it's a one-way sell-off in last few weeks. So I think there could be some pullback, but again maybe we could break 23,500 first, and then maybe Nifty could try to settle down around 23,350 kind of level, and then some pullback we could see from those level, because most of the stop losses are placed at this 23,500 strike price levels, because most of the traders are following this 200-day moving average. So I think, and Bank Nifty is almost now near to 200-day moving average, which is also uh, likely to test that level. So until the Nifty not crosses 23,800 in any kind of pullback, I think the trend is still on the weaker side, and maybe we could slide further to 23,350 level. That level we can see in next couple of days. And for Bank Nifty, I think the 200-day moving average, which is placed at around 49,700. So I think that level can be tested by Bank Nifty also. So I think still there is further more sell-off we could see in the next couple of days.
Naresh, what should one do with these so-called trader patronized stocks now? Vodafone, Yes Bank, Suzlon. I was making this point, I think 3 months ago, that's where I smack trouble. When stocks fall, you don't want to be recollecting it and saying that, oh, I got it right. But unfortunately, in this case, we've got it right. I mean, these were stocks which nobody should have bought at the first level. But when they've reversed, they're down 50%. So what should you do now with the Vodafone, Suzlon, Yes Bank?
So, out of all those names, Vodafone is something which has taken the largest knock. And there was hope when it started sustaining about 10, then went up, saw new fundraise, went up all the way to 18, 19. But moment it broke below the 10, 12 mark, it was a breakdown in a major way. Same way with Yes Bank, the stock has been something which has not really bounced back sharply, which just saw a spike to 30 odd levels a year, almost 6-8 months back, and continues to drop. So still avoidable. The only one, if somebody wants to do bottom fishing, could be Suzlon, wherein the things have totally changed for the stock in terms of it's no more a high debt company, which it used to be for the last 10 years. And the stock has corrected back all the way to 50. So if one wants to take a risk in this, only Suzlon. Apart from that, I would avoid Vodafone and Yes Bank. Even if they were to bounce, it may not be a sharp bounce. But at 45.50, a risky bet could be Suzlon.
Let me just scan through some interesting names here. And yesterday, frankly, the delight was Swiggy. Hemang, Jani, I have a lot of notes on Swiggy. Everyone is saying Zomato is better. But Swiggy still went up on a day when everything went down, Swiggy went up, and it was not on expected lines. What do you make of Swiggy? And why do you think it went up yesterday? And do you think it will continue to go up? Hemang, Jani.
Yeah, Nikunj, I think if you look at the current scenario, the appetite for the new age companies, particularly companies which are showing high growth in the current scenario, where majority of the sectors are struggling, there is a certain amount of appetite which is there. Of course, this was not reflected in the IPO per se, which did not receive very enthusiastic participation from retail and HNIs, and largely it was institutional participation that we saw. But I think at the end of the day, the theme remains quite strong, particularly on the Q-commerce. Food delivery also is stabilizing. And, while we are all struggling to find the pockets of themes where there is going to be a growth, this is one pocket which is growing at, let's say, 25-30% on a quarter-on-quarter Q-commerce and with reasonably good visibility. So I think that is what explains the interest in Swiggy, because Swiggy is at a considerable discount to Zomato, about 40-45%. And on majority of the parameters, there is a good amount of comparison that you can draw. And I do think that though yesterday's move was definitely a bit of a surprise, but even if you're looking at medium term or 1 year kind of perspective, if the stock stabilizes around the issue price or a little higher than that, I think the risk reward definitely is quite compelling for a 25-30% kind of an upside.
Right. Let's move on then. Let's talk about Eicher Motors, Eicher Motors earnings as well as what brokerages have to say. And Hemang, you have the management which is very upbeat and confident going ahead. But what's your take, especially when you talk about the two-wheeler end of the market? The four-wheeler end of the market is not doing that good. The commentary, however, they've been trying to actually instill a sense of confidence amongst the investors and consumers, but that's not how it's been transpiring. But what's your take coming in, especially for the two-wheeler segment of the auto pack?
I do think that after a very strong 3 year of growth phase, the auto sector is going to go through a bit of a slowdown. You can call it a cyclical slowdown or any other name. The fact of the matter is that on a higher base, there is a challenge to kind of get a good amount of growth, be it urban side or rural side. And we think that it makes sense to kind of cut down the exposure on the auto, because from the top some of these companies may have corrected, but on an overall basis they have given a very healthy returns. So I would certainly cut down the exposure, and if I have to choose one company across all the pockets, I think Mahindra stands out in terms of growth, in terms of product rollouts, performance and valuations. So I would definitely consider, either retaining or adding to some M&M if there is any correction. But overall, I am a bit cautious on the auto sector at this point.
Mahindra and Mahindra has managed to hit out of the park, frankly. I mean, they are just getting it right. The migration from SUV has worked for them. The real blitzkrieg of new launches, expensive. I mean, higher end of the SUV market, lower end of the SUV market, now the EV portfolio is getting ready. I think more than autos, Hemang, this is just my personal view. Nobody's talking about the wealth of growth gems they are sitting on. Look at Vari, it's gone to a market cap of 1 lakh crore. Look at, there's another IPO company, I think, Premier, which has a commanding market cap of 60-70,000 crore. There is a business called Sustain, which is there in Mahindra and Mahindra. There is a home finance subsidiary, which is there in Mahindra and Mahindra. Nobody is talking about the subsidiaries and what they could do in coming years.
I do think, Nikunj, that many of these companies would have some entities where you could see some sort of unlocking of value. But I think, Nikunj, we have just gone through a phase of a little bit of exaggeration or exuberance when it comes to certain IPOs, and the way the market also has kind of gone up. And I think that we are in a cooling off phase where we need to do a reality check in terms of what kind of valuations, what kind of real growth one can really expect in the current scenario. So while Mahindra does stand out, because I think the tractor business also is showing a good amount of revival. But I think it's time to kind of let the market, settle down a bit and then look out for a much better risk reward opportunities.
32 points higher, lower for GIFT Nifty. Now just tell me 3 stocks where you think that the pain is going to be there for a long, long time. I mean, you think that The trends are broken, the supports are broken, and they are in serious bear markets, Rajesh.
So I think from power space, we have seen a significant supply pressure, and I think Tata Power is the stock where the major breakdown has been done in the previous session, and stock is now slipped below to 200-day moving average. The way stock has broken this crucial support area, we believe here we could see further more pain as this is the second consecutive month where continuous supply pressure is taking place in this stock. Stock has broken monthly chart upsloping trend line support area also. So we believe this stock may face further more pressure and possible down move can extend. We believe that this if it's sustained below to 420 kind of level, then a down move can extend to 340, 350 kind of zone also. So serious breakdown is visible in this stock, and other power space power stocks also witnessing the same kind of behavior. So I think this space can be looked at for going further short on this current juncture. I think another stock where we are focusing that on the weaker side, that is Indigo, is also looking weak. The way the supply pressure is visible on the near term as well as on the short term chart, I think Indigo is a stock where this stock can also go down further as stock has broken the important support area. Stock slipped below to all important moving averages. So we believe that if Indigo not able to cross 3940, 3950 zone, I think it may go further down to the level of 3650 also in the continuation of this down move. And another stock that we feel is from the automobile space, and that is, I think, Hero Motor. If we go with the auto index itself, auto index has broken 200-day moving average, and almost Nifty auto index has erased the gain of last 5-month rise. So the way auto index has broken all its important support area on the near term, short term, long term chart, we believe that auto space can be looked at to go short. So Hero Motor has broken the important support area. So we believe that furthermore sell off can continue in Hero Motor. Down move can extend. Possible lower target for Hero Motor we could see towards 4300 to 4250 kind of zone. So Hero Motor is also short with the stop loss of 4650.
Go back to that whole FNO inclusion, because that's, I think, the only talking point this morning. I mean, nothing. What will you talk about? Dollar index headed higher. Nifty below 200 DMA, yesterday's story. Pain in the retail market, everybody knows it. What is that new exciting thing which a day trader or our viewers, they really need to understand? That big fat list expansion by the FNO. Duresh, I don't know whether that's a coincidence or this list expansion was overdue. The Bank Nifty weekly expiry gets over yesterday, and then this entire FNO inclusion list comes out. Just a coincidence, right?
So does not see it look like a real coincidence, because there has been no change, no addition for quite some time, and this was overdue. A lot of these stocks were eligible for a long time. So it kind of reflects in the sense that it is to counter the Bank Nifty volumes. But the fact is, whatever new companies come in the FNO basket, the volumes are really low. We've seen out of those 180, 200 companies which we have, beyond the first 100, 120 companies, the liquidity is low. Options really don't have much of volumes. So out there, it does not change a lot of volumes, but more the number, it is better for the market as such, because it gives you more options to trade.
Hemang, Zomato, DMart, Geo Financial Services, Policy Bazaar, what is the obvious inclusion according to you, and what is the odd one out in this FNO list, Hemang?
I think DMart, was very much overdue. It was a bit of a surprise to why it took so long for it to get added onto the FNO list. Zomato, of course, because the market cap and the kind of excitement which is around there, including the volumes. I think it was absolutely fair. Geofinance, I'm a bit surprised because while there is a lot of promise, etc., but it's a relatively newer listing and nothing much to talk about other than the pedigree per se. So that, to my mind, has come as a bit of a surprise at this point of time. But I do think that now that the expiry norms are changed, where you will see the monthly expiry only for Bank Nifty and few other indices. So maybe the NSE is trying to have some more stocks on the FNO so that part of that market share loss or the volume loss can be compensated. So hopefully it will help in some way.
Hemang, great to have you on the show as always. Good speaking with you, getting set for the pre-open rates. We'll skip them a little bit. We'll give them some time to adjust and then mark those. But Naresh, what about your mid-cap list? What's the ideal list looking like?
So that would be a buy on PFC. The stock did an uptick post numbers, faded off in the last two sessions, back to the same prices where it was before the numbers. So out here, a risk reward trade, stop loss at 450, target price of 500.
Rajesh, what about your mid-cap ideas?
So Tata Power is on the sell side. We are focusing the way stock has broken the support area. I think Tata Power can be looked at to go short, and we believe that here there is a potential to go further down. 370, the target we are focusing for Tata Power. So one can go short this stock with upside target with a stop loss of 409.
Right, so those are the mid-cap ideas coming in from our chartists.
If you like this video, then like, share and subscribe to ET Now.